Hello, today I'll speak about the potential opportunity that may be there in African equities. My name is Isaac Kamau, an investment associate at Nabo Capital. Over the past couple of months, in the second and third quarters of 2020, we've seen global markets trend upwards at a very rapid pace. African markets have also trended upwards, but have lagged quite a bit. Now, it is likely, and we do think that there may be some good opportunities that this divergence has exposed. So we do see some potential in African equities. Now, I think a key thing to note is the current environment is still highly certain. No one really knows for sure when the economies will actually get back to normal and when we'll actually see investors get more excited about equities. However, given the current prices, we do see some attractiveness in these markets. Why do we think there may be an opportunity in African equities? It really boils down to a few factors. I think the first one is the fact that yes, there was an economic impact of COVID, but eventually over time, the economies will get back to where they were pre-pandemic. And that will see an improvement in company performance and allow these companies to get back to where they were before, and that is likely to support a rise in the share prices. Another key factor that's somewhat tied to that is the fact that Africa, by virtue of how its economies are, where a lot of the economic activity is very somewhat subsistence based. These are activities which weren't that affected. If we look at the key sector in African economies being agriculture, this is an area that didn't suffer as much as the other sectors, and therefore African economies have actually been able to hold up better than developed economies. Of course, this doesn't apply to all African economies, but there has been that general trend. The other factor that is supportive of African markets having potential to do well is the fact that valuations are very cheap compared to where they've been in the past. This means that you can be able to invest in a company at a very favorable price. Now, you combine this with the fact that generally all across the world, we've seen an increase in the amount of cash that is flowing through the financial system. The likely result is that eventually investors will see this opportunity in African equities and invest there, leading to that flow of money that is supportive of a rise in prices. There are, however, some risks which it's important to not ignore within the context of what's going on, and these include things like, as I mentioned earlier, the fact that the economic recovery is not fully certain as to when it will happen and to what degree it will happen. Another risk is that African markets are heavily influenced by foreign capital. So the flow of foreign capital really has potential to control the direction of the market. It is likely that the capital will come back into Africa, but it is not for certain. Something to keep in mind that's also important as you invest during this period is the fact that not all companies will be affected in the same way. And just to give an example, if you look at, for example, a company that, say, operates in telecommunications, so that offers mobile network services, a company like that, while there is likely to be some impact, it's likely to be one of the companies that is not that heavily impacted. If you compare it to, for example, a company that, let's say, runs hotels, now that is one that is going to be affected very, very heavily. And that is why it's important for investors to choose companies that will emerge of the pandemic still fairly strong, despite the impact that they will have taken. These risks are why it's important to invest with an experienced and licensed fund manager who has experience being able to navigate the various waves of the economy and being able to control for risk and identify the right opportunities.